Hey, now myself. So sometimes my brain and my mouth are not on the same page, so I may get lost. But I just want to do this recording so that um, I can only do so many appointments in a week, and I help about 15, 20, sometimes 25 businesses in a week. So I'm really busy. And this helps me to be able to share with you more information to where it will answer some of your questions. And when we get to where, or when you get to where you want to move forward with an IUL, whatever you want to use it for, or cancer insurance or disability insurance, it's uh, you already know me. We can move forward quickly and it doesn't take a lot of time. So a lot of times I can get you um, taken care of in 15, 20 minutes over lunch or whatever. Now, let's just dive right in here. I want to share my screen with you. Okay, here we go. Now, this is I named this financial plan for auto shops, car lots, and mechanics. It's for that. That's who I designed this slideshow for. But any business can use this information. So you can share this video with your friends that's in business, or coworkers can share it with friends, put it share it on Facebook with their friends. And you'll notice that I've got license in 7 states. So I am pretty busy. And this is these products are to help protect your most valuable asset. That's your home and your money and your ability to have an income. Now, um, here's my license for 2 of the states, and you can pause it here if you want to. And now this is a little bit of what I will be doing. I am your field underwriter. I'm your advocate. I work with about 40 different A-rated carriers, and I work to design your IUL, your term life, your whole life, whatever you're looking for, cancer insurance, disability insurance. And I'll be talking with you about important details to determine what you need. What if you want an IUL, if you want term or what, and will be details like your health, your business loans, your uh, debts, and things like that, your retirement, 401k, IRA, and your rolling savings account. What type of assets do you have? What type of asset buckets? And I'm to help get you some type of IUL in place if that's what you are wanting to go forward with. And what are you looking for? Do you want to use it for the tax-free retirement? Do you want to use it for uh, building your business? Do you want to use it to help pay off your house in 10 years or less? Do you want to do a fast track of getting debt free? Now, what I do is I help protect your employees and offer an alternative tax-free retirement that doesn't lose due to the stock market recovery. And if it goes down, and a lot of business owners and employees like the idea that they do not lose money when the stock market goes down. And I'll show you how that happens later on. Now, not all shop owners will begin to offer this as an alternative. However, many are seeing the value it brings, and they like the idea of having an income, a retirement income that they don't have to pay taxes on. Now, as your advocate and field underwriter, I find something to get you the IUL program at an affordable, comfortable budget. I don't want to make you insurance poor. I want you to be able to get something, whether it's just a standalone cancer policy or a disability policy. I want to get you something to where it's comfortable for your budget and that you won't, if you have to buy a set of tires or have to repair something on the house, it's not going to break the bank. You'll be able to do that. And if you can use this IUL uh, fund as your emergency fund. What I like to do is have people leave some in there for the emergency fund. That way, if you have money in your savings account, you can transfer that to the emergency fund in the life insurance policy, and you can have access to it whenever you want. Now, I do this with you over the phone or over Zoom, and it's very simple, very easy. We just have a meeting on Zoom, talking. I ask you questions, see what you want to do, and I find out what type of plans you already have in place, both for the company and for the individual worker. And who's going to be responsible for major responsibilities if someone passes away? Do you want to grow your business? How would a check for 500K or $1 million help to keep the company going or to buy out a partner's share if something happened to one of the partners? Now, I navigate down to the absolute best IUL options with you. You decide what you want to do. And once you pick your plan, then I will help you fill out an app for you and the employees and submit it to the carrier of choice. Now, does that work for you? Now, what you want to determine is, do you want to maximize the cash value or do you want to maximize the death benefit? That's what I do is I will design it for you as to how you want to use it. Okay. Now I have a 23-year-old. I had a 23-year-old that decided, maybe he was 25. He was 25. He decided that he wanted to put in like $50 a week. So he was going to put $200 a week or $200 a month into the IUL and start putting it in there for the savings. And you can put 35, 50, 100, whatever you want. And it is flexible. You can put more if you want to, depending on how it's designed. And you can use it for retirement savings and for the life insurance. Now, about 90% or 95% of the businesses that I talk to, the business owners that I talk to, decided that any tax-free retirement income plan is better than paying taxes in your retirement years. Would you agree with that? Now, um, this is a little history about our company. We've helped 373,000 people over the course of our existence. And here are the carriers that we work with right here. You may know some, Mutual of Omaha. Some of them have been in business over 150 years. And they have billions in assets, billions. Now, how does the owner use this? An owner can use this for multiple ways. They can use it to buy shop equipment. They can use it for working capital. They can make loans to customers with interest. They can use it for buy here, pay here capital, and you can access it anytime. You buy cars to fix and sell, buy car inventory, and a lot of business owners like to use it for golden gloves for their employees. And I'll go over that a little bit. And they use it to help grow their shop. And um, they use it for the tax-free retirement for workers incentives. And they use for buy and sell agreement. And you can have a cross policy that you can use to buy another shop. And if something happens, you get an influx of cash that's tax free that you can use to buy the other shop. And it covers the owners, the managers, workers, key personnel, and you get tax free capital. Now, how does the workers and the mechanics use it? They can use it to buy tools, they can use it to buy a car, they can pay off debt, they can pay bills. If they can't work, they can use it for tax-free retirement. They can pay medical deductibles. They take families on vacation. I don't recommend taking them on vacation, using the cash value for vacation. You you can do that, but if you do, you want to make sure you pay it back. And build it builds tax free. You can get to it anytime with no penalties, and it's safe from the falling market. Now, businesses using IULs for their employees. Now, several years ago, there was a large mining company they offered this alternative to a 401k plan. It was essential to matching program for employees who wanted to use it for a tax-free retirement plan. Businesses like to call it a golden glove program. It helps keep valuable employees for the long haul. The person would put in $100 with after-tax money every month, and the company would match it plus $25. So they would put, or 25%. So they would match it with 133. Now, many businesses will take out a business IUL on essential employees to help cover the loss of a valuable team player, and they will get a lump sum check to use as working capital if, God forbid, the Lord calls them home. They can also use the cash value to borrow against and use it to finance purchases they need instead of the bank. Now, Index Universal Life has a lot of tax advantages, and the tax code for the tax advantages are 101A, 72E, and the 7702. Now, what this is you overfund a life insurance contract and pull out tax-free money for retirement, or you can pull out tax-free money for loaning out to people or investing in something and making money. It grows in tax value, it grows in value tax-free, and it provides a death benefit, generally tax-free, used for buy and sell agreement. As I explain this, please think of it like a Roth IRA married to a life insurance policy. So how much do you think the taxes will go up? The taxes can only go up with our country's programs and our debt, right? No rules of Uncle Sam apply, no limits like 6K a year. You can put in up to 100K a year if you want to. No penalties for taking it out. Now, there's an article in Forbes that many people do not view life insurance as an essential and vital part of a retirement income plan. And Ross, a certified financial planner with a PhD in financial and retirement planning, notes that there are tremendous uses of life insurance in a retirement income plan because of the preferential tax treatment that life insurance receives. All right, I need a drink of water. Now, how some businesses use this idea. Kate's husband passed away from an accident. She was devastated. Not only was she facing life without the love of her life, but now she would be a single mother raising 5 children. She was also left with wondering how she was going to make it because hubby did not have any personal life insurance. Then she got a wonderful surprise. Ken and his business partner had $1 million policy on each other. She got the money and decided to put it into a max funded IUL policy so she never has to worry about money again and she will not lose it in the stock market. And this is a great plan for business partners when it goes directly to a widow or a spouse. They get the money tax free and have no capital gains tax on the money. Business can also use this for key personnel insurance policy and receive some tax-free capital to build their business. Thousands of savvy professionals use the max funded IUL for working capital and quit paying interest to the bank. Hank flips real estate, not 2 or 3 houses at a time, but large scale like malls, apartment complexes, renovates them, sells them, makes a handsome profit, and moves on to the next one. Now, this is something that a lot of people like about the IUL. And for one, it's protected from the falls in the market. It never loses money. It has a cap and a floor, and it's a lock and reset. Okay. So what happens is if you look at these graphs where the circles are on the green line, that's where it just goes straight across. You'll notice that the red line goes down. That's when the market goes down. And the green line just goes straight across. We call this zero is your hero because it doesn't lose money, right? And then when it starts going up, it doesn't wait for it to get up to back where it was. It starts going back up as soon as it goes up. And this is something that a lot of people like. You can take the cash value that is in your insurance policy anytime you want to and use it and put it out there in an investment in something that you want to invest in and make money with it. And then you put it back in to the cash value policy and it will grow even when you have the zero is your hero thing. When the market is going down, you can make it still gain because you're loaning money out of it or taking money out of it and loaning money to other people to gain interest off of those loans and making more money. So if you do this right, you can make money in the 2 figure or 2 digit area. Now, here's a little graph about how it went for 20 years from 1999 to 1919. And you see how it doesn't go down, it just keeps rising whenever the other one goes down. Now, here's a comparison with the 401k and the IUL. Now, what you should do is watch on or search on Google for the 401k fallout on 60 Minutes on YouTube, and it'll talk to you. And with the IUL will not mess up your Social Security. When you are on Social Security, you're allowed to make so much. If you make over so much, then for every $2 that you make, you're going to have to give $1 back to Social Security or to the government. And whatever you've got in Social Security, if you die before you use it, the government keeps it. It's the government money. That's basically what it is. It's not your money. It's the government money. If you try to use it for anything, well, you get penalized. Well, you can't even get it out unless you're 65 or you go on disability. And the ugly truth is that the 401k is a lousy idea, a financial flop, a rotten repository for our retirement reserve. It fell 31% according to Fidelity. And when you lose 31% of your retirement fund, you've lost a lot. And sometimes the retirement fund will lose more than 31%. At one point that we saw in the graph before, it lost 51%. It dropped. That was a real eye opener. Now, a lot of people that have money in their 401k, a 72-year-old is going back to work because their 401k dropped so much. A 72-year-old is not retiring because of the 401k and the IRA. If you go back to here, when your 401k drops 31%, then that means you're not going to be able to draw any money out of it. You're going to have to wait, or it's going to deplete and you're going to run out of money. You need to work on planning not to run out of money. Now here, this is the difference between the tax deferred and the tax favored. The tax deferred, we all know, is you have to pay taxes later, which what would you rather pay taxes on? Would you rather pay taxes now when you have a lot of deductibles, or would you rather pay taxes when you're retired and you don't have a lot of deductibles? And the tax favored indexed you universal life, you don't have to pay taxes. And another thing about this that a lot of people like is when you've got the IUL, when you've got an IUL, it doesn't go through probate. It doesn't go through debit if you owe a lot of debt. It doesn't go through all that. If something happens to you, it goes right to the person that is your beneficiary, or it goes right to your business if the business is your beneficiary. And you can also do that where the business is 50% of the beneficiary and a person is 50% of the beneficiary. So it would go to both people tax free in most states. And if for some strange reason you find yourself in court or somebody's trying to sue you or whatever, they can't get to the tax. the index UL. And if your partner decides that they want to leave you, they can't take it either in most states. Now, what type of business do you have? You have how many employees do you have? Do you have a car lot, auto mechanic shop? You know, would you consider offering a IUL retirement option to your employees? Have you lost any money in your 401k? Would you like to avoid that and move your funds into a IUL like a lot of folks? These are some of the businesses like small business, large companies, self-employed, contract workers, truckers, owner operators, mechanic shops, salon owners, restaurant owners, realtors, real estate investors, anyone basically. Now there's the number that you can call. And I'm going to start sharing with you who all has used this for their company. Ronald McDonald. Ronald McDonald's used it for the Ronald McDonald campaign. And here's a list of companies that uh, use this idea: General Electric, Procter and Gamble, AT&T, H.J. Heinz, McDonald's, Walt Disney, and a lot. You can look over that list. Harley Davidson, Forester Farm, Apple, Senator John McCain. Now, a lot of people wonder if they will change the tax laws on uh, the life insurance. But a lot of people say that no, it won't be changed because a lot of the people up there on the hill, that's where they keep their money stockpiled, is in a life insurance. And they don't want to take away their stuff where they're keeping their money stockpiled. And you can stockpile it. I showed you the slide where the fellow had $8 million in a life insurance policy. Yeah, that is feasible. Okay. Now, yeah, there are some, here are the negatives that a lot of people talk about the IUL. And if you understand, if you understand about the IUL, all of these are nothing. It's just that if you design them right, if you follow the rules, everything will be good. Like Dave Ramsey, he talks about overfunding it and this. Well, yeah, you do overfund it, but you don't want to put all your eggs in one basket, right? You want to have your retirement income diversified. Some of it's taxed, some of it's not taxed, some of it you've got money coming in all the time. And um, with inflation the way it is, you want money coming in all the time, and you can recycle the money that's in the IUL. You can pull it out, use it for the year, make money with it, put it back in, and then recycle it. It's just a constant recycle that where it never runs out of money. Okay, here's banks that use this idea. It's called bank-owned life insurance. And Bank of America in 2019, they had 22 billion in there. Wells Fargo Bank, 18 billion. JP Morgan Chase, 11 billion. US Bank, 5 billion. 2019, 300 or 3,800 banks owned $190 billion in life insurance. Why would a bank put their money in a life insurance? company, because life insurance companies are safer and more secure with the money than a bank is. A bank only has to have 10% of the money in the bank. That's why if people go and start asking for the money, they don't have it. What they've done is they take your money and then loan it out to somebody else. So your money that's in your checking account is not there. It's loaned out to Joe or Bob for a house. Over 2 billion of cash went into IULs from people, business owners, and others just like you in 2019 alone. Why would they do that? With this being the case, do you think the advice that some people are giving is good or questionable? You think they don't know what they don't know? Okay, here's what businesses can use the cash value for, and people. You can donate to charity, you can pay out bonuses, you can buy a tow truck or equipment, lifts, you can start a new location, you can use it for emergencies, you can use it for planning for college, planning on children, stockpile for deductibles, take time off work, stockpile for payroll taxes, stockpile up to 100K yearly, and then use it for a safety net for slow times, loan to customers for repair, whatever you desire to use it tax-free and penalty-free. Now, here's a story that we'll call fella Bob. He was working on a plan to pay off his business loan early. And what he was doing was he was paying in extra money. He was paying extra money in on his loan so that he could pay it off early. And he got into a situation where he wasn't making as much money and or he got hurt and he wasn't able to pay the payment for the property, the business property, and the bank decided to foreclose on it. And this is what happens. Well, what you can do is you can use this cash value life insurance. You stockpile your money in there. You use it for your emergency fund. If that's what you want to do, you use it for your emergency fund. And if something happens, you don't have the money to pay your note for the building or whatever, take it out of the emergency fund, out of the insurance, the cash value life insurance. Now, here is how this works. Okay. How you use your IUL as your business bank or your personal bank that you want to use. You stockpile the money in your IUL policy. That's where you keep your emergency fund because it grows interest, compounded interest. Not only that, but it also blossoms if something happens to you into a death benefit, and it will pay off your house. It will, pay off your bills, whatever. And a lot of real estate investors will use this and they can use it, have a high death benefit, and pay off their real estate investments. So what you do is you borrow from your carrier using the cash value and the death benefit as collateral. And you can use it also with the bank as collateral. Okay, and you put it in a separate checking account. You don't have to do it this way, but this is the way that you can do it to where you can keep it with accounting. And then you take it from there and you pay off like any debts you have by using the cash value. Pay off your debt, pay down on your house, pay your car off, pay the credit cards off, help pay off the school loan, whatever type of debt you have, you can use that. Or if you want to get braces or something for your kids, or you're off work for a while, you can use this. And then what you do is you make payments back to the checking account. And then from that checking account, you pay your loan back that you got from your IUL policy. Now, I know you're going to say that, oh, it's a loan. Well, yeah, you're borrowing from the carrier. You don't borrow your cash value, you borrow from the insurance company's general fund. So you're still making interest. You're still making interest off of your cash value, and you're paying them interest. So it's kind of like no loss because you're making interest and you're paying interest. But what I do, or what you should do, is if you are loaning it out to customers for their bills for their repair, say you got one that's got a $2,000 or $3,000 bill for working on the car or whatever, you loan them $2,000 or $3,000 from your IUL, then you mark up like 15, 20%, whatever you want to charge. You mark up the 15, 20%, and then you pay that back into the policy. So you're making more money if you're on your interest from your loan. Okay. Now, John D. Rockefeller Jr. started this back in 1917, and his family is still using it. 6 generations later, they are still using a family banking idea. This is something that you can do once you start with the insurance IUL or the whole life or whatever you decide that you want to go with, then you can keep using it. And when we talk, we can talk about how you can set it up to where the money will never run out, even 6 or 7 generations down the road. It'll still be there. Now, there was one fellow, I guess a lot of people will use this IUL to stockpile their money. And if they get cancer, they'll use some of the cash value to help. Well, this fella, he had enough in his cash value life insurance. His wife had cancer. And what they did was they bought this RV and they traveled around for the last year or two of her life. This is something that this business owner decided to do. What he wanted to do was he wanted to put in a lump sum for 6 years, 80K a year. He wanted to put in 80K a year, okay? And that 80K a year for the first 6 years got him a policy for $1,834,000, okay? Hold on. 1 million, that's what he paid, okay? And when he put in that 80K a year, that's how much the 68,000 is what he had for cash value. All right. Now, the reason why companies do this is because when you max fund your business IUL, it builds up really, really quick and builds up a lot more to the end, at the end. Okay. This business put in 80K a year, which was $480,000 over the period of 6 years. And over the period of 10 years, he had $611,000 in his cash value life insurance. Okay. And his death benefit had grew to $2,377,600. $645 right there. Okay. And that's all he put in for 6 years. And then down at the end, he had right here 2,262,864 in his cash value. Yes, that is possible. That is possible. Okay. Now, the money stays in this account and it keeps growing and it keeps growing. You are actually using the carrier's general fund. You can borrow money against this 86,000, the cash value. You can borrow money against that, and it's not coming out of your cash value. It's coming out of the carrier's general fund. They use the life insurance as collateral. Every month, you can put in cash value so you can also take out to pay monthly bills. If you put in all your business income into this to build your nest egg, how much would you have at retirement and how soon could you pay off all your debts? Ask me about the program to getting debt free with your business. You will notice that $67,000 or $6,700 a month is as much as the limit for a year for a government controlled account. How do you like getting the government out of your retirement program? Okay, now here with this max funded, he stockpiled his he put a stockpile of money in here. Here, let me. He put a stockpile of money in here. And the reason why a lot of people do this is because it does not show up on FAFSA as an asset. Get one as and use it for your college, your children's college fund. One dad used it to help his son be a doctor. Now, just keep in mind that these numbers are not carved in stone. They could be higher or maybe lower. If you have a curveball thrown at you, this could change. Now, there are ways that you can make this build up faster and make it grow more if you want to. When you max front end load this program, you get a longer time to build the earnings. If you have the company funds to do this, it is great. Just starting with a small lump sum at the beginning, like 2K, 5K, 10K, 20K, or even 27K, this will get you started where you can pay the quarterly taxes and have a life policy. You will be able to use this during your time working, and then in your retirement, that will be tax-free. Now, I want you to keep in mind the total in your cash value from this max funded in 6 to 7 years. Your possible cash value could be $2,262,864. Your death benefit could be $4,029,199. It will give you a lot of time to bulk up your cash value, and you can use it to pay your business expenses while earning money to pay the next 80K. The key to building faster is to use it to make more money and add it to your cash value. Okay? Now, look here. Look, I want to show you a comparison with this. This business owner decided that he was going to put in 10K and then 12K additional every year for the life.
So he put in $370,000. Now, see the difference between the cash value and the amount of their death benefit? Here, it's only 1,054,000 in the cash value, a potential 1,054,000. All right. So let's go on to this one. Now, this one is a very common one that a lot of businesses like to use. Okay, they will put in like a 20K to start and a 500 a week to use for business expenses like the quarterly taxes, getting out of debt, growing the company, advertising, stockpiling the cash, buying equipment, etc. This is not your normal term insurance, but I can get you term to get you started so that you have some coverage for life curveballs you may get. Okay? Now, this is a great way to hide your money from everyone. No one knows how much money you have in it. You can set one of these up for each of your children. This is how a lot of people pass their legacy on to their kids tax free. Okay. Now, like I say, this setup is the most used by small businesses. They can take their rolling savings or rolling checking account and get some life insurance to cover them. It also gives their emergency fund and a way to pay their monthly bills that they can use along with helping to get debt free. You will notice that the 20K they put in to get the program started, all of it went into the cash value. Oh, let me get the arrow right there. 30K. So they max funded it. They put a bunch in to start this off, and then they paid like 500 a week to go into their. Plus, you have a $754,000 life insurance policy. Now, what I like to do is I like to design them to where you have a policy that's under $1 million. If you have a policy that's under $1 million with this carrier, some of the other carriers will go more, but with this carrier, with you can go up to $1 million with a certain age. You can go up to $1 million, and you don't have to have a physical. If you go over $1 million, they want to have a physical. Okay. Yeah. You get a life insurance policy for $754,000 that if covers you if God forbid he calls you home. What savings account will turn 20K into even half that if you pass away? What would it look like if your family lost your income from your business because you did not come home due to a dying curveball? Okay. Now, you see how that they've put in here. Let's look at this number right there. 260. Look at the where I put the arrow, 260. That's how much 260,000. That's how much you've put in. And your death benefit has grown to 304,000. That's cash value. But your life insurance policy has grown from 754,000 to 1 million. That's what a lot of people like about this. As you grow your cash value, your death benefit grows. Okay? Now, keep in mind these numbers will be affected by life curveballs. so they are not carved in stone. This program has a set amount that you can have a lower monthly payment if times are lean. You can also put in more if you want to. Now, yes, there is this also has a critical illness program you can use with other living benefits also. Cancer is a major critical illness with every age. This does have a critical living benefit if you get cancer. Do you like that idea of not having to die to use this program? You may adjust your first lump sum to put in to the amount 2K, 3K, 4K, 10K, 27K, whatever you want. We can talk over your numbers and see what is best for you. Do you want to jumpstart it or just pay off bill? Do you want to jumpstart it to start paying off the bills and getting debt free? Okay, I'm trying to go so fast, I'm messing up. I'm sorry. Now here's the one that put in, remember, they put in $20,000 and 500 a week. That $740,000 that they put in, and their potential is 2,120,000 for their account value. Now, they decided that they wanted to skip 5 years taken out of here, which they can if they want to, or they can start taking out. But it says that according to the numbers, you can take out a retirement income per year, $279,000. Now, I wouldn't do that. I mean, you could live comfortably. Now, remember, this is a tax free. So when you take the money out, you don't have to pay taxes on it. It doesn't show up on your uh, W 2 form because it's not a earning. You're not earning this money. This is something that you've set up in a tax free bucket, a tax free asset. Okay. There's the $279,000. So instead of taking out that much, you could take out $100,000. And instead of it being $80,000, you get to keep $20,000. And if you do have Social Security coming in, and they are still taxing Social Security, you won't have to worry about that idea of if you make over so much, for every dollar you make, you're going to have to give back. For every $2 you make, you're going to have to give back a dollar. Now, like I said, notice this person decided to wait 5 years to start a retirement portion. You can do that. All right. Now, if you work the system, you can get debt free to really stockpile your money and you live in retirement without debt. How easy is it going to be for you to live? My purpose is to help folks get a program to help cover life's curveballs and to help them get debt free. Now, I know to have good debt, to grow your financial portfolio is good when you use it wisely. Consider this: when you retire with 2,270K and something, what could you use this for in retirement to build more cash? If you only did the normal amount recommended by financial advisors, like 4%, that would be $138,000 a year. What do you think would happen if you just kept paying the yearly premium and took out loans every year to make money and kept recycling your money through this program. I want to explain the loan idea, okay? Now, keep in mind that you do not pay taxes on loans. The loans you are using here is not your money coming out of your account, okay? These loans are from the carrier's general fund. They use your death benefit as collateral, all right? That's why when you start taking money out, when you start taking money out, you'll see that your death benefit starts going down. That's because they're using what you're taking out, they're using your death benefit as collateral. And if you don't pay that back, then what they do is they take it out of your death benefit. Okay. So your money is still in their system, earning returns that you will receive back into your cash value account. This is why banks, credit unions, and other business owners, just like yourself and many people, use this. Yes, that is right. You get earnings from your cash value even when you have taken out a loan. So I told you earlier that a man used this to help his son become a doctor. He had a loan for 300K to pay for the medical school. All the while, he had earnings coming into his cash value like it was still there in because it was still in the cash value account. Banks stockpile their money in bank-owned life insurance, then take it out and loan it to others and charge them an interest. They are earning money off the money twice here. Did you get that idea? Okay, here's another one. A 40-year-old, he's wanting to put in $75 a week. If you had a team player, if you had a team player, would you add $90 a week bonus to keep them to add to their tax-free retirement fund? How about helping them get debt-free, no strings attached? And there's my text business IUL to 615-319-4139. Okay. Now this is a worker. They put in moderately. Okay. How would you feel as a business owner if you helped all your employees get to be debt free and financially independent without the worries of being in debt, but having good debt that makes them money? Like a loan on the house they own to buy more houses to produce passive income. Even better would be to have a stockpile of cash in their cash value life insurance and make money twice as at once. How many employees would stay if you gave them a cash bonus at the beginning to help get this going and the $90 match weekly to build up their tax-free retirement and help them to use the program to get out of debt? Do you have valuable employees that are key players to your business? How about an employee that is a major part of your money-making business? What are you doing to keep them to not want to leave? Nothing says I really appreciate you more than anything besides getting a bonus every week, showing your appreciation for the job well done. What do you think? Are you with me so far? You may want to do like a business owner and his partner did and listen to this twice. If you have questions, write them down so we can talk about them during our conversation. Okay, let's see what this fella got. Oh, this is different. he got, well, this one was, okay, let's go to the next tab. All right, this is comparing the 401k, the tax deferred versus the IUL, tax free retirement. Okay, now this one, this was kind of complicated, but I'll walk you through it. Okay, I'm not going to let you read through this. I'll walk you through it. Okay. Now, for the contributions and premiums, you have the 401k, you put $11,000 and 250. That's before tax. It goes into probate, okay? And the IUL, the cash value, you put $9,000 in, that's after tax. No probate, okay? You get what I mean by no probate. It doesn't go through probate. They get it instantly. Okay. Now, the death benefit, say you paid this for 1 year and something happens and you pass away. The death benefit that you get from your 401k is $9,525, and that goes into probate. Okay. The death benefit that you get from your IUL, cash value, whole life, or whatever, is 178,619. That's tax free, no probate. It goes right directly to your spouse, your partner in crime. Then the taxes paid. Taxes to your 401k is 122,980. All right. Taxes while working is 56,250, and there's no tax on the IUL. Account balance. Okay, the account balance is 491,921. It may be less with the stock market decline, maybe a lot less. The IUL cash value account balance is 573,528. No losses on the stock market. And this is could be different, higher or lower, depending on the curveballs you get. Okay, now the fees and expenses. The cost for the 401, the 401k is 207,258.46. The cost for the life insurance or the IUL is $96,000. All right. Now the net income is $491,921, and you're out of money at age 77. Okay. And the account balance for the net income for the IUL is 573,528. And at age 77, your account balance is 1,169,788. Net income at 86 is not 491.92. You're out of money at 77 with the 401k. The income for the IUL is 1,003,674, and your death benefit is 367 or 60,000. Your net income at 97 is 491, same, and you're out at 77. Your income total is 1,529,408. Your death benefit is 51,373. Okay, now let's look at the stock market and compare them. Now with the IUL, what happens with this is the IUL is protected from the falls in the market. It doesn't lose money. Once you put it in there, it's there. Okay. It may not grow as much, but you're not going to lose money. Now, you have a cap and a floor, and it's a lock and reset. Now, a lot of people call this zero is your hero, okay, because it doesn't go past a zero. It doesn't go down. It, if you look right here where the blue circle is, hold on, right there, the blue circle, you got that flat line going right across through there. When it fell, when it goes down this way, the IUL does not go down. When it falls this way, the IUL does not go down. But you'll notice that as soon as it starts going back up, this starts going back up. You don't have to wait till it gets back up here to be able to start growing. That's why a lot of people love this IUL. Now, with this, you just lost 57% of your income. You put in 100, you went to $136,000, and then you came back down to 75. So if you've got 500, 250, $500,000, and you're in retirement and it's gained and you're getting ready to retire, then you have this market correction that goes down through here, and your $500,000 goes down to what? 200,000? You're going to have to adjust how much you take out, or you're going to have to keep working, right? And if you got this one that happens again later on in your retirement, you're going to be frantic, right? I'm just curious what will happen to your 401k in retirement with these falls of the market. How will that affect your income and your retirement? When you look at the graph and add
Income to help keep your tax bill low, or would you rather pay no taxes when you retire? Do you like this idea of having access to your money anytime with no 10% penalty plus taxes? And the shop owners, do you like the idea of being able to offer this to your mechanics and to your shop workers? Do you want to start planning for your retirement now so that you can have a tax-free retirement? Okay, now what I want to do is I want to share with you what type of tax savings are, yeah, let's go with the tax savings first. We'll go with the tax savings first, explaining them, and then I want to share with you the, now, here is a 45-year-old puts away $500 a month till he's 65. He does that in a 401k value. So he's got $274,000. Now, what I'm going to do is I'm going to share with you these numbers, and then I'm going to let you look over them. So they recommend taking 4%, but I put down 5% for retirement. So if you take 5% of 274,000, your income for the year will be 13,728. All right. And then The bare minimum, you're going to have to pay a 20% tax. So 20% would be 2,745. So your gross income will be 10,000. Now, if it falls while you're retiring, if it falls while you're retiring and it falls 20%, it's going to be 219, and your 5% will be 10,000 minus the 2196. So you're only going to get 8,786. And if it falls again, like it has sometime, then it goes down. And remember, while you're taking this money out, if it's not growing 4%, you're depleting. This is why people are afraid that they're going to run out of money before they retire in their retirement. And down here, if it falls, and if you keep taking the 13,728 every year, when it has fallen and fallen again and fallen again, it's going to deplete it a whole lot faster. Now let's look at this. This is the IUL value at 65, okay? A 45-year-old value at 65. He had 234,498. We took a retirement of 10%, okay? You don't want to take it all at once. Well, you could if you want to, but it's not, you want to keep it to where it will last. So at 10%, that's 23,300. So if you took the 23,354, your death benefit will still be 372,000, and your saved taxes is 4670. All right. At age 75, you've taken a total income of 233,547. That's $23,000 a year. Your death benefit is still gonna be 179,2470, and your taxes saved will be 46,700. If you go to age 85, your total income is going to be 467,000, and your death benefit is 125,000, and you've saved $93,000 in tax. If you live to be 99, you've total income is 700,000. And here's one for a mechanic. 28 pays in $150 a month or $37.50 a week for his IUL, and he wants to pay it until he's 55. So he pays it till he's 55, and at the age of 65, he's got 273,441 in there. So he can start taking the 10% of 29,000, and the yearly is 29,000 with zero tax. His death benefit is 324,000. His tax save is 5,940. And you can just look at those down through there and see. What I want to do now is I want to take you over here and let you see what this is. Okay, let's start with the mechanic. Okay. Okay, he's going to start paying at 29. Okay, he's 28 years old. He's going to start paying at 29, and he's going to pay $1,800 a year. That's roughly $150 a month. Okay, now this is non-guaranteed assumption current interest rate. Now, they only let us figure 6.9%, but a lot of them will do better than that on an average. And sometimes you will get more than that, a 10, 15. It depends on what you choose. Now look, the very first year he pays $1,800, and the cash value is $1,373. So he's only paying like $400 and something for the $91 or $91,000 life insurance policy. That's not bad for a year. That's where he's taken his dollar, putting a half toward the premium, the life insurance, and the other half toward the the retirement fund. Now, let's see here. Let's go down a little bit farther, okay? And he chose to pay till he was 55. Now, if he would have paid until he was 65, he would have had more of a buildup. But he chose to stop paying at 55. So he only paid in $48,600. Now, when you look over here at this column, he's got $126,455 in cash value. That's how much his cash value has been compounding interest. And his death benefit, remember we started out at 91? Well, his death benefit has gone up to $216,000. Now, look at this. Okay. Now, when he turns 66, he can start drawing $29,743. And his cash value is $296,103. Okay. And if he starts drawing when he's 66, by the time he's 68, he's got paid $89,229. And then if he lives at 78, he's paid in 48,600, and he's drawn 386,660. And his cash value, accumulated value from this, is 704,018, and his death benefit is still 198.27. Now, how many 78-year-olds do you know can get a life insurance policy to cover them for $198,000? Most of the time when you're 78, your health will make it to where that's why a lot of people like getting this and keeping it, because you always have a life insurance policy. And if you do it right, you can really use it. I mean, look at this. Let's see, he started paying when he was 29. He's got a value of $19,755 in there. And what he can do with that, if he wants to, is he can use that to buy a car, or he can use that to buy tools or a toolbox or whatever. Let me erase that. Okay. All right. Let's go back down here. Oh, wait. Okay. Wrong way. Anyway, you can see how it's very beneficial. I mean, this goes to the age of 88, where he only paid in $48,600, but in retirement income, he's getting $684,000, and he still has a life insurance policy of $143,000. So his total cash value is $1,341,000. And I think I ended this one at 88. Well, let's see here. No, I went on to 98. So if he lives to be 100 years old, if he lives to be 100 years old, his total cash value is going to be 1 million, or his total cash value for retirement will be 1,041,000. Okay, now let's go to where he pays till he's 65. All right. All right. This same 28-year-old paid till he was 65 years old. He paid $1,800 a year toward the life insurance and retirement, and he's got 296,903 in cash value. And this is a low figure. That's the most that they let us figure. But if you work it right with multipliers and everything, you can make it to where you have it above the 6.91. All right, now when he turns 66, he's going to start drawing $32,845 a year tax free. Now we've already seen on the spreadsheet how much tax you're going to save. And then just in 3 years, he's going to make more money than he's paid in off of his retirement income. He's paid in 66,600, and he's going to get back from retirement 98,536. If he lives to be 78, he's going to have 426,998, and he's still going to have a $204,000 death benefit. And nowhere will a 78-year-old be able to get a $204,000 death benefit. More than likely, his health is not going to let him. And what I did with this one, I figured it all the way to 91. So that's just a little, and here's somewhere a business owner, if you're the business owner and you want to sock away, let's see, $500 a month. So you want to, and you're 46, it depends on your age when you want to start, whatever. You can put in as much as $100,000 a year if you set it up right, or if you want me to set it up that way, you can put it in as much as $100,000 a year for 5 years, or what, And here you pay in $6,000 and you're getting $160,000 worth of life insurance. And it's basically costing you maybe $1,500 for the whole year. So there again, by the 10th year, you are making more money than what you paid in. And you go on down. And if you pay till 65, then you will be taking $23,000. You can figure this how you want to. You can you can figure it where you take income for 10 years and then you can, you know, pay off your house, whatever you want to do in retirement. And you just keep making. And then this one goes to 105. So you get $794,000. You get a total of $3,139,505 if you live to be 105. All right, well that's basically it in a nutshell. And what I want to do is I want to take you back to the PowerPoint right quick here. And I'm going to show you one more slide. Okay. Now, if you want to, you can share this with your workers. You can share it with other business owners or somebody that you think might be interested in looking at this. If they've got money in the savings account, if they've got money in their checking account, or in a 401k and they're past 59 and a half, and or even if they're younger than 59 and a half, sometimes you can, if you talk to a tax man or an accountant or something, there's a form that you can fill out where you can take it out before you're 59 and a half and not have to pay the 10% penalty. But a lot of people that are 59 and a half, 60, what they're doing is they're strategically doing a rollout of their funds in their IRA and putting them into this because it's making more of a income and making more accumulation than the IRA, and it's not subject to the loss of the stock market. Now, I appreciate you staying with me for the long haul, all the way to the end. So give me a call. Let's set up a time where I can work with your mechanics and with you in setting up a tax-free retirement, or in even if you just want to get a program in place to protect the partners or the business owners, whether it's a husband and wife team or it's just partners in general, a man and a woman or a man and a man, or you know, if it's a silent partner or whatever. Just give me a call, text me, and let's see what we can work out for you and get you a plan in place. And like I say, I appreciate you staying to the end, and you have a great day. And I will stop the recording. To have memories. Now,